Welcome to Trading School. So are you one of those who either want to start a career in stock market or want to invest in stocks but don't know the basics? Don't worry, we are gonna cover everything in this channel. So every week I'll be coming up with new video covering from basics to advanced about stock market and trading. So what we are waiting for, let's move on. Now one of the basic questions, what is a stock? So a stock represents your stake in the ownership of the company. So let's say even if you buy or hold one share of Tesla, that means you are a shareholder of that company. And that means that you own a part of Tesla's capital. Now the question is, how we can buy or sell a share? Behind the scene, how my order to buy or sell shares is executed. So let it be you are a trader. Now you thought of buying 10 shares of Tesla. You placed an order to buy 10 shares of Tesla with your broker, who has a direct link to the stock exchange. So once you place the order, your order moves to the broker and through him it goes to the stock exchange. The moment your order is executed at stock exchange, you will be able to see the transaction in your trading account. After T+1 day, the shares you bought will be credited to your Demat account. So now you have the ownership of 10 shares of Tesla. Now in case you are new to stock market, you must be thinking, what is trading in Demat account? In simple words, trading account is an interface from where you can place order to buy or sell shares. Apart from that, you can also view your profit and loss, all of your transactions, and a lot more. Demat account is where the shares you buy are credited to in an electronic format. There are several brokers through which you can open your own trading and Demat account. One of the important things that every trader and investor need to keep checking is the global market. What we mean by global markets here is the market in foreign countries like US market, China market, etc. A lot of factors are there which might affect the Indian markets like cost, inflation rates, financial crisis, government regulations, exchange rate fluctuations, etc. For example, if US hit some financial crisis, then their impact will be seen in Indian markets as well. So after considering all these points, some question may arise in your mind. Is it the right time to buy the stock? If not, then when it is? Is it the right time to sell the stock? Shall I hold the stocks for long? So how can we get answers to these questions? Yes, by analyzing the stock. We can analyze a stock either fundamentally or technically. So, with fundamental analysis, what we try to achieve is to find the real intrinsic value of a stock. A lot of things that come into picture while analyzing the stock fundamentally, like company's financial reports, historical data, competitors' analysis, any external factors that may affect the company's growth in future. So, if a company's fundamental analysis results out to be negative, it may hurt the share as well. On the other hand, technical analysis, we can say it's a study of price and volume of a share. Through this, we are predicting price movements and identifying trading opportunities by the current trend of the stock. This involves identifying the pattern, trend, volume, support or resistance regions. So technically analyzing a stock, you can identify the entry and exit position. One question you might ask to yourself is that, who is pushing the market higher on high volumes? Along with stock analysis, you should also be aware of other market participants, the strong hands versus weak hands. The strong hands, who are the institutional investors. These astute investors trade in large volumes. So first, we have foreign institutional investors or foreign portfolio investors. So these institutions are established or based in other country and make their investments in different countries. They are considered as smart investors. Thus, it's suggested not to trade against them as they drive the market. Then we have the domestic institutional investors. They are just like foreign institutional investors, but they make investments in the country they are based in. They can be like any asset management companies like HDFC, AMC, or an insurance company like LIC or banks, etc. And the last, we have retail investors who are known as weak hands of the market. A retail investor is a common man who invests and trade in stocks just like you and me. They are considered the weaker hands of the market as they trade in low volumes. So in this pie chart, you can see the percent of stakes owned by different market participants. Foreign institutional investors have the highest stake and retail investors have the lowest. With this, you can understand who is driving the market. Thank you for watching. Hope you guys like this video. Please subscribe, like and comment. I will be coming up with more videos covering all the basics to advance. Stay tuned.